my friends. Chris Marcus here with you for today's StockPulse market brief on Thursday, September 27th. Interesting day, especially with some of the political developments going on. And as you can see here, not good news for Tesla CEO Elon Musk, who was charged with fraud after hours today. The shares have already dropped about 11%, which we'll dig into. But first, let's run through the market levels in the U.S. Dow Jones closing at 26,439, S&P 500 at 2914, and a good day for the NASDAQ, back over 8,000, up a little more than 0.5% at 8041. Over in Europe, the DAX at 12,435. The Nikkei at 23,769 and the Shanghai Index at 2791. Quick look at oil, up 62 cents on the day, almost 1%, back up above $72 at 72.19. In the cryptocurrency market, crypto is almost up for 2 days in a row. Has that not happened lately? But Bitcoin you see at 66.92. Litecoin 63.74, and Ripple finally moving less than 10% over the past 24 hours. So again, crypto is sitting in that range they've been in for quite a few weeks now, and we'll see when the next leg up or down occurs in the crypto market. Quick look at the bond yield in the U.S. 10-year is at 305, so pretty much unchanged on the day. I guess the market's settling in a little bit after the Fed's meeting yesterday, but certainly with rates going up, the Fed giving the indication that they plan to continue tightening, albeit incredibly slowly, yet still nonetheless. Will be fascinating, and certainly that's one of the things I'm most keeping my eyes on is that bond yield. Look over at the metals. Gold at 1184 today, silver at 1429. So not too much happening in the precious metals. So with that said, let's dig into some of the news. As mentioned before, Tesla shares dropped more than 11% after the SEC charges CEO Elon Musk with fraud. I've talked about this a little bit before. I'm fortunate, not an expert on the Tesla situation, although good friend of mine, analyst Dave Kranzler from Investment Research Dynamics, writes about Tesla and Elon Musk quite often. So a lot of what's happening now isn't coming as a surprise. Certainly, when Musk first announced that there was that buyout offer, Kranzler was all over that, saying that did not exist. He turned out to be quite correct. And here you can see, obviously, his coverage of Tesla is not quite so positive, although, in my opinion, it has been pretty accurate. So if you're looking for a little more insight and someone who's seen this in advance, by all means, check out Investment Research Dynamics. We will also be having Dave on for an interview on the StockPulse network next week, early in the week, so stay tuned for that. And again, certainly a lot of concerns about Tesla, shall we say. Here's an interesting story over on Zero Hedge, the two biggest threats to this bull market. I like how the author starts saying the bull market seems unstoppable, and certainly it has been pretty much over the past decade now, although this author, Lance Roberts from Real Investment Advice, mentions that his opinion, the two biggest threats to the bull market are currently the tariffs and the interest rates, and certainly I agree with that. Talked a lot about the tariffs, how that's driving costs up, not ideal for businesses or for people who are actually buying things that are now becoming more expensive. And then certainly, of course, he digs into the interest rates here, which, as interest rates continue to rise, that puts more pressure on all of these bubbles in the stock, bond, and real estate market. And that was one thing that the Fed really didn't explain, how these markets are going to withstand higher interest rates. Again, one part I agree with the Fed, that you can't leave interest rates at zero forever because that eventually blows out the currency. Yet how they're going to be able to unwind their past decade of policy without triggering counter effects in the rest of the markets remains to be seen. So good article worth checking out here. Debt threat rises. The government will soon spend more on interest than military. Another thing the Fed didn't comment on yesterday, but as interest rates go up, especially with so much of the US debt being short-term borrowing, that means that the debt expense is going up as well at the time when the deficits are higher than ever, which leads me to believe that we're coming to a head with a lot of these fiscal imbalances. And I think the markets are going to react and price that in sooner than later. Again, it's been about a decade wait, yet these issues don't go away. The debt's still there. It's going to become more expensive. And again, that's why so much of what we look for on here on StockPulse is the commodities and the hedges against that. So with that said, we will wrap up for today and just mention that, as always, this video is sponsored by Miles Franklin, where you can buy precious metals and other hedges against things like profligate U.S. spending. Miles Franklin at milesfranklin.com, or you can call 1-800-822-8080. With that said, thank you as always for watching. Hit that subscribe button, and I will see you again tomorrow. Thanks.